Welcome to our video on trading gold. The reason why we've made this video is to basically show our clients and people who follow us what we believe is happening on gold. We want to start by just showing you a screenshot of I represent We Make Mints as one of their traders. This is my account. As you can see on here, over 9 grand's worth of profit on 2 trades, one short on gold, one short on silver. So anyone, unless it's a total fluke that's got that sort of profit, they know what they're talking about. So let's go on. This video is aimed at people who have a basic understanding of technical analysis. So if you don't understand this, come on to wemakemints.com and we'll teach you. In the 70s, gold really took off. It bumbled along for quite a while and then shot up, and then it bumbled along again, sort of 2001. Gold absolutely skyrocketed. This is what you call bull market, obviously. Anything that shoots up that quick is unlikely to be sustained, and what normally happens is you get a pyramid, also known as a bubble. And that's what we believe gold is until it proves otherwise. The blue line is a key moving average that we use. Gold stayed above it for quite some time. It only had a little blip where it got underneath it, but most of the time it stays above it. Up at this price, gold struggled to stay above it and absolutely fell off a cliff. And it is tanking at the moment, and we believe there's much more downside to come. Before we get started on the technical reasons why we think gold is going lower, we are not biased on this. We don't care if gold goes up or it goes down, as long as we know where it's going. Anyway, this is quite a strong trend line. Every time it touches it, you have quite a bounce and it reaches higher highs, etc. We spend about 1 day below it, get right above it, and look at the rally it goes on. It actually breaks down here. It comes into, we haven't identified, but a bit of a wedge. But anyway, it tries to, for a couple of weeks, to get back above it. It fails. It then flirts around this blue average here. So the bulls are still in play. As soon as it fails, the bears take over. And then look at the drop of that. That is one hell of a drop in a market like this. In a market that's gone up and up and up, that is a very big drop, and it is a big sign that there's more downside to come. We've got a few more charts on this. So we've got the same chart again. You can see the bit that we just spoke about where it flirted with that average and then it absolutely dropped. There's a trend line you can draw here. It bounces off of it, comes close to it, bounces off of it again. The third time actually closes right on it, and then the next day absolutely fell off a cliff top. It then after that went up to rally to back test it, which is quite common. Once you break a long-term trend line, you quite often do get that back test. We had that. That's where we actually went short on gold, and then took our profits quite low down on that drop, which was out of luck, if not anything else. We may well get another back test of this line at some point. We'll go into in a minute what pattern we actually think is developing on here, but it wouldn't be unheard of to expect, or it wouldn't be a million miles off expecting another touch of this line at some point, which would be an ideal opportunity to make an entry for a short. Right, so we've got a zoomed in bit of the chart we're just talking about on good old paint. You can't beat a bit of paint for charting. Anyway, this looks to us, or to me, to be a textbook bear flag at the moment. Unless this starts morphing into something else, what will probably happen is we will see lower lows. Bear flags are bearish continuation patterns. The price projection for this is $1,250. Or 1,250, could have said. That is where we're expecting. If this is a bear flag, if this does not morph into something else, we are looking at a good 150 points or dollars off of gold. That is what we're thinking. That is a brilliant short. Cannot exclude the possibility that the price won't actually sort of wander up towards that trend line again, which would be an ideal time to go short. But as things stand, that is what it is looking like. We cannot exclude as well a potential double bottom here. I don't think that is a double bottom. In a bear market, it's quite normal for the price to bounce off previous lows. What I think will happen is we'll break that little support. You may get a bounce on the green support line, but we do think that will break and we will see lower lows in gold. That's where we think the gold market's going. Something worth noting at the moment, if you go onto our website, wemakemints.com, we have a section on there called Chart of the Week. Every week, our traders get together and they come up with what they see as the best trade for that week, whether it be shares or commodities or whatever. We've been saying about going short on gold for 2 weeks now. This is a chart that we uploaded a few days ago on our website. If you go onto our forum, which is members only, if any of our traders are making a trade, we post the chart on the forum so our members can actually follow that. If you're interested as well in the fundamental reasons as to why gold has shot up in the last decade, if you go onto articles, there's a well-written article that explains it in layman's terms as well. We've got basic and advanced tutorials for members who, sorry, not members, people who want to learn technical analysis. And on our services page, we do private lessons as well via Skype. So anyone can learn how to do this. We will teach you. But as things stand, until gold shows us otherwise, we want to be selling rallies in gold. We expect more downside.